Hello again, fellow BeachBum traders. Thank you for joining us for part 2 of our weekly trading game plan for the trading week of December 25th through December 29th. Where in part 2 of our weekly trading game plan, we'll be selecting our top swing trading stocks to watch, stocks in our bullpen. We'll talk about how to build and manage our shopping list. We'll also talk about a couple other additional ways to generate income while you're waiting for your top swing trading stocks to set up, that being using options as well as dividend paying stocks. So we've got a lot to cover, so let's get started. Welcome to Ricky Kahn, MD. Thank you all. Walter Lyons, thank you for joining us. Want to wish you all a happy Christmas Eve day again. Hope you all are doing well. So here's our Google document with our notes for part 2 of our weekly trading game plan for the trading week of December 25th through December 29th. We keep our notes in publicly accessible Google documents. Our notes contain links to bonus video, tools, and resources we use to select our top swing trading stocks to watch. If you have not already seen part 1 of our weekly trading game plan titled Santa Claus Came Early to the Markets This Year, we would highly recommend you also view part 1, as that contains our market analysis, strategies, trade ideas, etc. that we're using to select our top swing trading stocks to watch, and additional strategies and trade ideas for making money trading the week of December 25th through December 29th. We keep all of our notes in a publicly accessible Google Drive folder, so you can refer back to the notes from part 1 for this week, as well as notes from previous weeks. And again, you can find a direct link to that Google Drive folder in the description box below. Welcome, Brian Moritz. Hope you're doing well as well. So firstly, we'll quickly review a couple of our trade updates for the past week, and then we'll look at the charts for those trades in Webull. So firstly, we got stopped out of our latest long position in land. Land is a monthly dividend-paying REIT on farmland. We'd entered on December 13th at 1371. We got stopped out on the 18th at 1418 for a nice profit with an ROI of about 3.5%, which equates to a monthly ROI of about 21% on price appreciation. And we also collected the 5-cent monthly dividend for December on land. So congratulations to all of our fellow BeachBum traders who also profited from this swing or scalp trade on land. And as you'll see, we're going to see if we can get another opportunity to do a similar swing or scalp trade on land going forward. It does look like it might have dipped out a little bit. Welcome, Easy Mike. Hope you're doing well. Thank you for joining us today. Our other trade update is a very long-term hold that we've had. We've had a position in QYLD going back to January of 22. We got in at 21.51. We finally got out for a small profit on the 20th at 17.36, which this was set up as a dividend reinvestment program, so it reduced our cost basis to the point where this profit, or where this trade generated a very small profit, considering that reduction in cost basis of all the reinvestment of all the monthly dividends we received on QYLD. So congratulations to any of our other BeachBum traders who profited from this long-term swing trade or investment on QYLD. And we continue to have QYLD in our dividend payers sheet. We'll keep an eye on it. I was quite disappointed, and I want to look at very briefly at the performance of QYLD, which is a covered call ETF on the NASDAQ 100 relative to the performance of the NASDAQ to the Qs. Again, I was pretty disappointed with its performance. It didn't seem to perform as well as the Qs. So this we might be looking for better dividend payers going forward. But again, I was happy to get out with us at least a small profit and not have to wait for it to become profitable again. So we'll jump over, again, I want to look at that QYLD one in FinViz as well, just to show you that relative performance. But just a quick reminder, if you would like real-time alerts of when we enter or exit a trade, you can get that information by joining any level of our Patreon. As soon as we enter or exit a trade, I post it to our Patreon members. They get email notification of that entry or exit point. Also, we have several channels in our Discord. So I also have Thinkorswim price alerts set up, and when those get triggered, it automatically posts to the Thinkorswim channel under alerts in our Discord. That, again, our Patreon members have access to, so you can see when it triggered on land, when I got stopped. If it's a trade, if I make a trade based on Thinkorswim trade alert, then I would reply in that channel. If it's not related to a Thinkorswim price alert, then I would post that in the Trade Alerts channel, which also our Patreon members have access to. And we'll talk about this other real-time alerts channel in a little bit. So again, if it would help you, again, I don't ever recommend anyone blindly follow us or anyone else into or out of trades. Do your own due diligence. Make sure the trade fits your style, your risk tolerance, risk reward profile. But if it would help you make money, help you succeed in your trading career, to get real-time alerts when we enter or exit trades, again, you can get that information by joining any level of our Patreon. So again, I want to quickly look at QYLD relative to the Qs first in FinBiz. So another tip is you can find links to all these trading tools, etc., on our homepage, beachbumtrading.com. So there's my link to FinBiz. Again, I want to compare QYLD for the past couple years. So if I zoom this one out, you can see when we entered it, which was January of 22. So you see on that weekly dip there is when we bought into QYLD, but you see it's, performance hasn't been very good, even over the past, year. It never did recover back to that original level. If we compare that to how the Qs has performed over that same time period, you'll see where we entered, again, on that dip in the Qs in January of 22. Again, it underperformed in 22, but then we see in 23 the Qs has, outperformed. It's back up to its previous high of late 21, and yet QYLD, again, never got back up to that previous level of late 21. So again, there's something causing a deterioration in QYLD. I'm not exactly sure why it's underperformed, but again, we'll be looking at better performing dividend payers going forward. So again, we were happy to get out with a small profit, but again, I think other people have done some analysis on QYLD as well, and it does seem to underperform even the Qs over the same time period. So again, we'll have to understand why that deterioration and maybe find a better alternative. Welcome, the Crow. Thank you for joining us. Hope you're doing well. So I just looked at the chart for the Qs. If I look at the chart for our trade in land, again, we got in on the 13th. There's the dip on the 13th. We rode that up till the 18th. And when we got that breakdown, a reversal on the 18th, again, we got stopped out. You see it's dipped further, and then it did bounce back. We'll be looking for, again, additional opportunities to get back into land if we get another dip back down into the low, high 13s, anywhere below 14. And I've been watching the level 2s to see if I could get something in there. We had a quick dip on the 19th, but then it bounced back pretty quickly. Okay, let me grab a quick drink and we'll go over our top swing trading stocks to watch list for this week. go through the updates, and then we'll look at those charts in Webull. And also I've got an announcement to show you another way you can see our watch list going forward. Firstly, in our top swing trading stocks to watch list, as we just mentioned, land, we're going to put that back on the watch list, try to catch that dip. Swing land again. Land's one of the REITs, monthly dividend paying REIT on farmland we like. Traded that profitably numerous times. We're going to take MSB. This is Masabi Trust. It's a small steel company. We reviewed that a couple weeks ago, put it on our watch list when we saw that rotation out of steel. Since then, we've had a rotation back into steel, and you see all the steel companies pop. There's also that buyout of a Japanese company, I guess is Nippon Steel, I think is buying US Steel X. And caused, further pop. We kind of thought there was an opportunity there. I wasn't quick enough to catch it. Hopefully some of our fellow BeachBum traders caught that pop in MSB and steel. Welcome, Sydney Osborne. Good to see you again. Thank you for joining us. Yesterday, we looked at our technology component screener, and we saw that most of the components are at a new high, and they're kind of forming that high, potential for a rollover. So we've got shorts on several of those technology components that we're watching. SARK, which is the short on the ARK-K. SOX, which is the short on semiconductor sectors. And again, we're using the long version of those to determine our entry point. So we're looking for a top and rollover in ARK-K for an entry in SARK. We're looking for a top and rollover in SOXL to determine our entry point in SOXS. And again, we talk about that in more detail in this video, and you can access that link in our notes and also on our BeachBum Trading channel. Also, we are still long a position in USOI. That's the oil. So when oil broke down below 70, we took a sizable position in USOI. Again, USOI is a dividend-paying stock on oil. It's an ETN, pays monthly dividend, pretty nice monthly dividend on oil. However, if we do get a reversal, I've got to stop on our current position on USOI because we're already getting the monthly dividend for December. If oil does roll over, we'll take profit in that position in USOI. If oil dips again below 70, then we would re-enter another position, possibly larger again in USOI. So we'll continue to scalp oil if it keeps, making little pops and then dropping down to the 70 area or so. We'll keep scalping that using USOI, collecting the dividends, waiting for oil to trend back up, which I think it will, given the conflict in the Middle East, etc. But if you're not already in a position, you could take a position on a dip, collect your monthly dividends on USOI. Welcome, Flip of the Shippa. Ricky Khan, if I missed you, thank you all for joining us today. Hope you all are doing well. So in the past, again, I'll talk about some updates, and then we'll jump over to charts, etc. Other ways to see our watch list. In the past, we've had, if anyone wanted to get more frequent updates to our watch list, including price targets, dividend information, optionality information, earnings report information, we have a automatically generated web page that our Patreon members have access to. That contains our watch list and our bullpen, again, with price target information, etc. Come out with a new enhancement recently that I think hopefully you all will find beneficial, and that I've generated a new Google Sheet that contains our watch list. Gets updated daily at the end of the day. It's very similar to, has essentially the same information with some additional information as our web page did. So it's got sheets for our watch list, our bullpen, and now also our shopping list stocks, and I'll show you that in a few minutes. Again, I'm working on that, open to feedback. Also, I've added copied the sectors and screener sheet from our ETF Google Sheet into this watch list Google Sheet. So one-stop shop, I can quickly monitor the sector performance, and I can also look at that technology components FinBiz screener very quickly and easily from this new watch list Google Sheet. As you'll also see, I've got a conditional formatting on the symbols so that they show green if the current price is within 10% of the support price and the risk-reward profile. The current risk-reward profile is 2 or better. Show up green. So again, a quick and easy way I can look at our watch list, see which stocks to focus on. So we'd love your all your feedback. Again, all of our Patreon members of any level will also have access to this Google Sheet. It's in our Patreon folder. And again, you should already have access to this, and I already posted an announcement in our Discord with early access to this Google Sheet. So going forward, this is probably where we'll watch our watch list, etc., and eventually we'll retire the web page and just use this Google Sheet. So let me show you this Google Sheet a second. So here's our new watch list Google Sheet. Again, I've got several tabs. There's our top swing trading stocks to watch. So watch list 1 is our top swing trading stocks to watch list. And we've got a bullpen and a shopping list. Again, we've got our sectors tracker and our screeners tab. So you can see there's the stocks currently on my watch list. We're using the Google Finance functions, which are near real time. So they're about 20-minute delay. So you can see which ones are, what the current price is. Is it trending up or down? We've got the buy at price and sell at price, same as our previous web page. This is essentially the support and resistance. All the white columns, again, are Google Finance functions. So we've got the daily high and low. We've got the 52-week high and low. And then the gray columns are ones that are set, automatically updated at the end of the day from our database, from our automated systems. So you can see, again, the support and resistance levels, see the current risk-reward profile, the 52-week risk-reward profile. Again, we've got a quick link directly to their FinBiz profile. Also got their next earnings date, if we know what that is, current dividend payment, next dividend payment, next dividend date, current yield, and whether it's optionable, and then any additional notes that I want to put on any of those items. So again, the gray columns are updated from our automated systems. The white columns are Google Finance functions. So again, I can quickly and easily see, which ones are within 10% of their support price. So I can focus on those. I can also quickly see, which ones are trending up or down. So if it's trending down, it's going to be approaching my buy price. Probably want to focus on those. So I hope that helps. And again, love your feedback. We'll also be looking at the bullpen and our shopping list tab. Again, I mentioned I've got a copy of the sector tracker sheet, same thing that's on our ETF Google Sheet. So you can quickly and easily see, which sectors are moving up or down. How will that affect your watch list stocks? And then we've got our copy of our screeners. So again, I can quickly see the technology screener component. I can, screen for other potential watch list stocks quickly there. So again, if you'd like access to this Google Sheet as well as our currently our web page, alerts, etc., you can join any level of our Patreon. So now I'll jump over to Webull and quickly look at the charts for our top swing trading stocks to watch list stocks, and then we'll come back and look at the additional sheets in our Google Sheet. Just a quick reminder, if you're not already using Webull, you can still get 75 free fractional shares of stock by opening and funding an account and funding it with 25K or more. You can get up to 30 fractional shares by opening and funding less than 25K, and each of those fractional shares are worth $3,000 to $3,000. Again, we use Webull for our market analysis, our due diligence, the majority of our trading. And if you would join Webull with our affiliate link in the description box below, you'll also help support our BeachBum trading community, which we greatly appreciate. Looks like it timed me out. So again, a nice feature of Webull. I'm using the online browser version of Webull. Another nice feature is you can have, numerous different watch lists. It's easy to flip between them. Already talked about land, so we're looking for a dip in land. Again, anything under 14 is pretty good. Last we got in 1371. 1371 seems to, or 1370. If you look at the level 2, that seems to be an area that they typically put a block buy in, so that's why I keep getting in at 1371. We talked about ARK K and looking to short ARK K with SARK. So again, ARK K's made a new 52-week high recently. You can see it's bouncing along that resistance, that pivot point. So along the lines of those technology components, so both ARK and SOXL, so shorting with SARK and SOX. Again, I haven't been too eager to jump into a short position. We're in the Santa Claus rally, as we discussed yesterday. This is the last week, and I do expect some window dressing from the fund managers, and they're going to want to hold the Magnificent Seven, the big winners for the year, on their books. So again, not too eager to jump into the shorts, but towards the end of this week or definitely next week, I expect a rotation, and we'll talk about that again next weekend. So more so end of this week, early next week, we'll be looking for a rotation and opportunities to short those components that are, overly extended to the high side, bumping against their resistance level. So again, we're watching ARK to take a short in SARK. Watching SOXL. Again, SOXL very high. Looks like it's topping, testing the previous high. And again, I think they'll jump into NVIDIA, AMD, etc. towards the, they're going to want to hold that on their books the end of the year. So I'm not too eager to jump into there. But early next year, we expect some profit taking, some rotation, and then we would short semiconductors with SOXS. And then we talked about oil, USOI. So again, when oil breaks down below 70 is when I like to grab a chunk of USOI, hold on to it, collect the dividend. Again, you can see it's kind of bouncing between these pivot points right now. If it decides to roll over, we'll take some profit and wait for it to come back down. If it continues up, I'll just keep moving my stop up and collecting the dividends. Again, I don't want my stop to be too aggressive because I can just collect dividends while I wait for oil to either continue up or roll back over. Okay. Next, we'll look at our bullpen stocks. So if anyone's new to our community, the concept of the bullpen stocks are not ones that I'm generally watching real time during the day, although with the introduction of our Google Sheet, it's much easier to watch these bullpen stocks as well, just not my primary focus. They're ones we've identified that may have an attractive setup in the near future. So typically I just revisit them at the end of the day. If their setup is improved, we put them in the game, move them up to our top swing trading stocks to watch list. If they break down or run away, then we just take them out of the bullpen and we can revisit them in the future. So the first one we've had in our bullpen for a while is CPSH, is a small electronic components company. You can hear our previous quick due diligence on that via the bonus link in the notes. Again, small cap, kind of a low float electronics company, seems to be basing. Again, I'm not overly eager to jump into that this week, but come next week when we get the rotation and we get the laggards to leaders type of rotation relative to the January effect, and we'll talk about the January effect again in soon. This may be one that we want to pick up early next year as a laggard that has some potential appreciation going into next year. And it does seem to be holding up pretty well. One we're taking out is EBIX. We added EBIX, I think it was last week, as a potential software company. We did a quick due diligence on them, and the day after that, they filed for bankruptcy. They had a short seller attack, and they do have high debt, which is an issue. And again, so they had a short seller come out and attack them, and they filed for bankruptcy rather than to try to fight that. So we immediately posted in our Discord that we're taking EBIX off of our watch list. Now, just another note, our Patreon members have access to a stocks watch list updates channel in our Discord. So if I do make any changes to our watch list after that web page has been generated, or in this case, after our Google Sheet has been updated, I would post that to our stocks watch list updates in our Discord. So again, our Patreon members get alerted of any intraday changes to our watch list. So you can see when I saw that bankruptcy filing, we took EBIX out of our watch list. Hopefully no one got caught in that. Another one we've been had in our bullpen, we looked at and talked about gold. So gold had made a new all-time high not too long ago, got severely rejected, broke back down to the low 2000s. Now it looks like it's swinging back up. But if we do get another retest of that high and a rejection, an opportunity would be to short oil off that all-time high using GDXD. So, and again, we can watch that in our ETF Google Sheet as well. Another one we added last week or so to our bullpen was OGN, the drug manufacturer. Again, we did a quick due diligence on them, but they've run away. It's already run up, and I didn't catch that run up. So maybe again, some of our BeachBum traders were able to catch that run up. I missed it, so I'm not going to chase it, and so we'll take it out of our bullpen for now. Welcome, MD. If I missed you earlier, thank you for joining us. So again, just a quick look again at our bullpen in our new Google Sheet. So you can see we've got our current bullpen stocks, GPSH, GDXD, and again, the same type of information on our watch list, and again, the same conditional formatting. So when those turn green, it's going to tell me that they're close to the support level. And again, if they have an attractive risk reward profile at that time, you can see, CPSH is not showing as green right now, so that tells me it's not time to pursue that. So if we go over in Webull and quickly look at the charts for those two, again, we'd use, well, here's CPSH. So here's the electronics guy. Again, I'm more interested in this. You see it's been basing. It's been very flat for an extended period of time, but it's down significantly for the year. So again, it's potentially vulnerable for tax loss harvesting, although again, that period should be ending this week. And so potentially next week, if we see swing back up in CPSH, this might be an opportunity for a small position for an outperformer going into next year. So congratulations on that, Crow. He said he caught the bounce on the day, dead cat bounce on EBIX after that bankruptcy filing. So again, if we're looking to try to short gold, we want to really actually watch the peak in the gold spot price. So the /GC futures price is, or in FinViz, I watch the futures chart more so because GDXU, which is the inverse of GDXD, does tend to lag the gold price. So you can see, even though gold had made a recent new all-time high, GDXU did not make a new all-time high. But again, GDXD is the inverse of GDXU. So again, it's going to lag the actual spot gold price some, and it looks like there is some level of deterioration. These are all leveraged ETFs, so it may just be the deterioration due to the leveraging. But again, I would use the spot gold price. If it hits a new or tests that all-time high again, that would be the trigger to enter a short using GDXD. So I hope that all helps. Okay, I don't have any honorable mention stocks for this week, so let me grab a drink and we'll talk about our shopping list stocks, and we'll look at that new sheet in our Google Sheet. Welcome, Becca. Thank you for joining us. Glad to see you. Okay, the concept of our shopping list stocks is, again, have a list of stocks that you want to buy, hold, etc. Ones you always wanted to buy, given a dip in the markets and a irrational reaction to earnings. Also, right now, be the end of the year, we've talked about the January effect. Again, I put some links to our videos on the January effect in the notes. You can also find them on our BeachBum Trading YouTube channel. So again, next week, our focus will be talking about rotation from laggards to leaders, and what stocks may present opportunities, what sectors, stocks, etc., may be opportunities in that time frame. And along those lines, as I mentioned with CPSH, you may want to start building your shopping list of those types of stocks that may be down significantly this year, but again, they're strong companies. They're not zombies. They're not losing money. Although those may bounce as well, and due to the January effect in January, we want to stay away from those. Again, just a reminder, none of our content's financial advice. We're not financial advisors. All of our content is for education and entertainment purposes only. But again, I don't like zombie companies. I'm not hip on companies losing a lot of money. But there may be some good companies, again, that are down significantly for the year, like we mentioned, CPSH. that you might want to start putting on your shopping list. Maybe not buying this week, but maybe into early January. Those may be the ones that you want to start picking up for, again, a rotation from leaders to laggards, laggards to leaders going into next year. Again, just be aware of the wash sale rule. So if you did take a tax loss sale, tax loss harvesting on any of these stocks, be aware that there's a limit as to when you can buy them back or anything that is essentially equivalent. So you can get more information about how a wash sale rule works, how you can avoid invalidating your tax loss harvesting via that video with the link in our notes. Again, another new feature we've added. So in our new Watchlist Google Sheet, I have now a shop list tab. I had this in our database, and so now this new shop list tab gets automatically updated in this Watchlist Google Sheet. It's got just my current shop list of stocks that I always looked at the end of the day. This Google Sheet makes it much easier and quicker for me to look at some of these stocks. Some of these are ones that in the past, on irrational dips on earnings, we've made some nice profitable trades like Bud, Cody, IBM, etc. In the past, they had irrational reactions to earnings, and we made a nice profit on their recovery. So I have those in my shop list. Again, if I see a big drop, Disney, again, we're watching Disney. If it drops below 90, I'd start to get interested again. DNN. It's one of the uranium miners. We've watched JEPI and JEPQ as possible dividend payers. I've got several of the REITs we typically watch: Land, LTCO, Stag. Also, MP Materials, you've heard we've been wanting, haven't had much luck getting in before it bounces back up. We've got some of the Mag 7, Amazon, Microsoft, Netflix, etc. And then again, USOI, Tesla, uranium. So again, I'll start culling, filtering, building out our shopping list, and now you can see, some of the stocks that we're watching for potential additional opportunities. And again, you can get access to this watch list Google Sheet with all of these tabs by joining any level of our Patreon. So I hope that helps. Additional information, you can see, again, some of the ones we're looking at, watching, and again, you can see if these have some kind of irrational reaction. If they turn green, then it might be something that I, want to take a look at. Maybe we want to start looking at LTC again. It looks like it's getting close. So if we get a dip in the REITs, maybe LTC, Stag are ones that we might want to pick up again. So I hope that helps. Good morning, Born to Be Free. Thank you for joining us. Hope you're doing well. So please, let us know what you think of the new watch list Google Sheet. If you want any enhancements, changes, etc., please let us know what you would find helpful. What else would help you make money trading, help you succeed in your trading career, and we can see what we can do to make those enhancements. Okay, nextly, we'll quickly look at our dividend payers Google Sheet. If anybody has a dividend payer, I'll go over some of our updates to our dividend payers Google Sheet. And again, if anybody has a dividend payer you want to specifically look at, I've got some requests I want to cover, but then we can take a look at those as well. Another quick reminder, you can also get access to our dividend payers, our ETF Google Sheet, puts ROIC Google Sheet by joining our Patreon at the All Access and VIP level. So again, if this Google Sheet can help you generate your own schedule of dividend payers with whatever, weekly, monthly payment schedule you would like, with whatever risk reward profile that fits your needs. Again, you can find those in our dividend payers Google Sheet. Quick updates. I added Hershey Company to our main dividend payers. It popped up in Aquarius being in decline and may present an opportunity. So I wanted to have that able to track that in our dividend payers Google Sheet. So you'll now see Hershey in our dividend payers. So last week's part 2 chat, Brian Moritz mentioned AMT, and as a follow-up, Easy Mike mentioned CCI. So I want to take a quick look at those two dividend payers in FinViz, and then we'll also look at the risk-reward profile. So I've put both of those in the ad sheet of our dividend payers Google Sheet, and we can compare the risk-reward profiles of AMT and CCI and see if either of those potentially is an attractive dividend payer that we want to pursue. So first I want to jump over to FinViz, and we'll look at the charts and the profile for AMT. So what is AMT? AMT is American Tower Corp. So it's a specialty REIT. If we look at their profile just real quickly, they own and operate multi-tenant real estate, leasing, communications, so essentially towers, sites to wireless service providers, radio and television. We look at their EPS and their profit, so they are profitable in general. Total revenue looks okay. We look at their quarterly, so they're making money, so profitable. So yeah, they make decent amount of money, have pretty high debt, which is not uncommon given the REITs. You can see nominal dividend yield of about 3% is optionable. See the float outstanding and float, not a significant discrepancy. See the 52-week range, 150 to 2 or 155 to 235. So not a whole lot of range. You can see it recently broke out of this resistance level, so it was significantly cheaper. We see, the dividend payments pays 162 approximately quarterly. We zoom out a bit. We see, it's got plenty of room to run up. Not, can't really get a double out of it at this point. It's already run up significantly. It's pretty high. So if you got it down that dip in 160s, that was probably the place you'd want to get it. It is breaking out above the moving average. So, it's trending upward, got room to run. So if it's one that you want to ride the momentum, collect the dividends, we'll look at the overall adjusted yield and etc. in a second. But again, it's already, run up quite a bit, broken through the resistance. So again, if you want to ride the momentum and collect the dividend, we'll look at that in a second. The other one is CCI. So again, this is a Crown Castle Inc. We'll look at their profile. I believe it's very similar. Yep, they're another tower, wireless infrastructure. So essentially these are competitors to one another in the very, very same category. They're tower REITs. See, their EPS is good. It's positive. Total revenues, pretty stable, pretty good. EPS did decline recently a little bit. We see, however, in the chart that it got rejected off its resistance level, so it's having, more difficulty breaking through that resistance. Look at their dividend, 156. It's like about quarterly. So again, pretty stable, 156 dividend quarterly. So their nominal dividends, 5.45%. Again, not as high a debt, but these tend to have high debt. It is optionable. So again, I added both of these to the add tab of our dividend payers Google Sheet. So if I do a find for AMT, again, now I can find there's AMT. So I put them together. So there's AMT and there's CCI. So we can see their dividend payment. Again, pretty low yield. So AMT is only 0.3%, CCI is 5%. See the risk reward profiles, not a lot of price appreciation. So AMT does have a little bit more price appreciation from a support to resistance level. Again, it's broken out of that previous resistance level, so it's got some room up to its 52-week high. So again, a little bit better near-term price appreciation, but longer term, if CCI could break out of that resistance level, it's got a little bit more of a 52-week risk reward price appreciation. So you can see the adjusted yield. So actually AMT comes out, 9.5, CCI is only 4.5. So along those lines, under 5%, I can make 5% in a money market. So I don't see any reason to go into CCI. Again, if you want to ride AMT, the adjusted yield isn't bad, assuming the momentum holds. If it rolls over and starts to decline, you might want to get out. So I hope that all helps. So I hope that helps, Brian Moritz. If you guys have other comments about AMT or CCI, other things we should consider, please let us know. But I hope that helps. So again, if anyone else has any other dividend payers you want us to take a look at, you can always ask in the comments to our videos and our Discord and our social media. We've got a series of videos on how to use our dividend payers Google Sheet, how this is constructed, how you can use it to build your own dividend payment schedule in a series of videos that you can access via the link in our notes and also on our BeachBum Trading channel. So let me check the chat, see if anyone else has a dividend payer you want to look at quickly right now. Yeah, Sydney's been asking about this MBI. They paid a large special dividend. I'm sure I probably don't have that in here because it's kind of a special case. Yeah, MBI is not in there. It's not in our ad. It's kind of a special case. They did a one-time special dividend. It's like $8 or something. It jumped up when they announced that special dividend. So you can see $8 special dividend. Of course, it jumped up, $8 when they announced that special dividend. You can see they haven't paid a dividend over the past year. So again, that's a very special case. Their dividend percent is 0. So again, a very special case. That went ex-dividend on the 21st. So I would expect it's going to, plummet on that ex-dividend date to compensate for that $8 dividend. So you can see it's, pretty just stable, choppy there. It's an insurance company. Again, you see that huge pop on the dividends near previous resistance. So again, I would expect it to retrace significantly following that special dividend. So if you got that $8 dividend, great, congratulations. But I would not expect further appreciation at this point. So I hope that helps, Sydney. So if I just quickly spin down, look at, greens, and we've got some, some bond type funds. SGLDI, it's a monthly dividend payer on gold. We talked about, I added Hershey, so we'll take a quick look at Hershey. You can see they pay a 119 quarterly dividend. You see it's got a nominal yield of about 2.6, but again, it's been beaten down. We'll look at the FinViz chart real quickly for Hershey. This is why I wanted to add it. Again, been beaten down severely. It's got plenty of opportunity for price appreciation, so it pays 119 quarterly. Again, I'm not overly eager to jump into Hershey. I mean, we're all familiar with Hershey Corporation. They've well-diversified chocolate, etc. It is optionable. It's got, pretty high debt, only 2.4% nominal yield. Some discrepancy with their float and outstanding, so they might have an offering out there. Look at their profitability. Again, revenue is, actually increasing. EPS is increasing. So I think, again, it's just been beaten down due to rotation out of, consumer. Their EPS, again, increasing. So, company looks healthy, looks good. Again, I think it's just a rotation out of consumer defenses when they went more into technology, etc. So again, I think there's going to be a time where this is a nice opportunity, and we can see the adjusted yield is pretty attractive. So we've got plenty of room to run. Risk reward profile is pretty attractive. Again, not necessarily doesn't fit the 2-to-1 that I like in the very near term or for 52-week. But if we get further declines in Hershey again, when it swings back up, maybe we'll take that as a potential swing trade. I just like it to get to our 2-to-1 ratio if at all possible. So again, you can go through our dividend payers. You can see JEPI, JEPQ. Again, risk reward isn't all that good. It's better for JEPI right now than JEPQ. See the risk reward, for land. We buy it for price appreciation. It's LTC. We recently traded O. If it comes back down, it's another one we would pick up again. I think Easy Mike was talking about REMX, which is a rare earth, I believe. Yeah, rare earth ETF. So you see the risk reward profile on that. And the yield. So again, you'd want the price appreciation. SAR, another one Easy Mike likes, I believe. We talked about TLT and TLTW, so TLT is run up quite a bit. And then we talked about USOI. Again, you can see the dividend payment information on USOI and the risk reward profile. So I'm going to quickly go through our options strategies. Again, we sell covered calls on our existing positions when stock's going up, buy them back when it's coming down. We sell puts, cash secured puts when stock's going down, buy them back when it's coming up. Again, since the VIX has been pretty low, premium that's on options hasn't been all that attractive, so it's not a strategy I'm focusing on, but it is another strategy. You can generate income while you're waiting for your swing trading setups to present themselves. And again, we use our puts ROIC Google Sheet to help us identify those opportunities, and you can get access to that puts ROIC Google Sheet by joining our Patreon at the All Access or VIP levels. I don't really have any changes to that. So if you would like us to do research on a particular option, just let us know the symbol, expiration date, strike price, etc. Also, we have a series of videos on how you can use this to identify opportunities to sell and buy back puts, so you can access that. Option strategies for beginners with examples series in the notes, and also we have a whole playlist of videos on how you can use options, make money trading options on our BeachBum Trading YouTube channel. So I'll just very quickly take a look at that. Again, it's not a strategy. If the VIX starts to perk up a bit, this may become a more attractive strategy. But right now, there's really nothing that's showing with an ROIC of over 5%. So again, my money, I get a better return on my capital by leaving it in the money market in my brokerage account than risking it trying to sell and buy back puts. So again, you can see the premiums. You can see which ones I'm watching. So when they're red, it means it's going up. When it's green, means it's going down. Maybe something we want to look at selling a put. So again, if Disney does decline, maybe some opportunities there. But again, premiums are all very low. So again, this gets updated again automatically at the end of each day. We collect this options information, update both the watch list and the research tab. But again, none of the premiums are all that attractive. The ROICs are all very low. So again, if the VIX perks up or we get more volatility, maybe we'll be able to get more premium using this strategy. But again, not something I'm focusing on a lot right now. So if there's something, options you want us to look at, please let us know. I did clean this Google Sheet up, so I removed unnecessary sheets. So now it's just the watch list, the research tab, and then our tools that we use. So end of the day, I use Option Seller ROI tool to see if there's any additions that we want to make to our watch list, and then I can add those in and have our automated systems collect the data. So hopefully that's a little cleaner for everyone. Please let us know what you think, and we can make further adjustments from there. Okay, in the last couple minutes, I'll come back. We'll talk about, you can see we have a new alerts channel in our Discord, so you can get alerted. I have an automated system that in the past sent me emails if stocks are moving up, breaking out near their buy price. And what I've done is created an automated system so that gets posted to the alerts channel in our Discord. So again, you can see as these alerts come out, there's quite a bit of information, trending information. I find this very helpful when we see, several of the ETFs start to move. So here you can see the small cap bear, it's bottoming, so it's near buy price. We see here's SRTY nearby, so that means, the short's going down, so that means small caps are going up. So there's TZAs breaking out, so it's going up. So again, it helps me quickly also see trends in the market. So, when things are, technology's going up, you'll see SOXL, ARK-K, TECL all going up. If it's coming back down, then you'll see the inverses start to move up and break out. So if you would like to get access to that alerts channel, you can get access by joining our Patreon at the All Access or VIP level. And hopefully in the near future, I'll do some more. You can see the first video we did explaining how these alerts work You can access that via the bonus link in our notes. Hopefully I'll do some more videos and some more documentation about how all these alerts are constructed and how you can use them to make money trading. Hopefully some of our BeachBum traders are already finding benefit in that information and helping them make money trading. So I want to quickly, I know I'm running long today, we covered a lot of information. I want to start a discussion on trading biotechs to start to respond to Carmen's question about a specific biotech. Let me open up that. Again, I want to just start the discussion on trading biotechs, and then we'll continue that in the future. Let me grab a drink a second. I'll babble a little bit about that. Okay, I didn't see Carmen offhand, but hopefully she'll be able to hear this response. So I'll show you the question Carmen asked. So she was looking at BIVA. Apparently they had an issue with one of their trials. Essentially, it's a good time, and I responded, okay, trading, in my humble opinion, trading small biotechs is complex and risky and would require significant discussion. So I've kind of promised to start to cover this in our weekly trading game plan this week. So that's what I'm trying to do. So again, we used to trade biotechs quite a bit, particularly when I was building our account. So early on, they do offer, nice risk reward. You can get 2, 4, 10 baggers, but again, they're risky on these trials. If they succeed, they can double, quadruple. If they fail, it can immediately get cut in half. So again, it's high risk, high reward trading. It is very complex. So again, I just want to start a discussion about trading biotechs and some of the things to consider. And then I pulled some of the old resources that I've used in the past that are still available. So you can see links to these. So in the future, we'll probably take a look at each of these resources in more detail on how you can use them to trade biotechs. But again, I just kind of wanted to start the discussion. And again, we'll have a whole series probably about trading biotechs. I'll probably continue these discussions over the next couple of weeks, particularly going into January. With January effect, we may see some of these catching a bid, being attractive buys early in January because they're severely beaten down. They look cheap, and so and again, high risk reward profile. So again, I know some of them, the LabVIEW already started to run a bit. We've had some buyouts, so it's another way. These small biotechs get bought out by a large pharma company, and again, opportunity to make money. So just to start this discussion, some things that are important in trading biotechs. So this is some of the factors to consider. Is you have to know when the catalysts are. So mostly the catalysts are trial dates. So when are they going to read out the data from their trial? When are they going to meet with the FDA? There's a date called the PDUFA date, which is when they meet with the FDA. FDA makes a decision, and again, those are when biotechs tend to either pop or drop. And again, they can double or get cut in half or worse on those catalyst dates. So it's important to know when the catalysts are and trade accordingly. Sometimes things run up into a catalyst and you want to decide, are you going to hold through the catalyst for the potential reward or get out? Another very important factor, particularly in these small biotechs is most of them don't make any money. They'll show as trading below cash because they have a cash pile, but the question is how long can they run until they run out of cash? And so I have a calculation in my database that tells me how many quarters are going to be cash flow positive, essentially until they run out of cash. So the question is, can they make it to their next catalyst, their next trial date, before they run out of cash? And if they're only 1 quarter or so, how long do you want to hold them? Again, they're going to run out of cash. They're going to have to do an offering, dilute, and you want to know if you're at risk of further dilution in the very near future. So very important to know their cash burn, know when their catalysts are. Can they make it to the next one? Or are they going to run out of cash and have to do an offering? Another thing that's important with these, I'm stealing this, I think, from Brett Jensen, one of the guys in Seeking Alpha I used to follow, Trading Biotechs, is do they have multiple shots on goal? Is some of the, you want to have multiple opportunities to get your reward. And if they only have one drug, one trial in their pipeline, so it's a matter of knowing their pipeline. So you have to look at their pipeline, see how many shots on goal they have. So if they miss one and it gets cut in half, do they have other shots, or is that it? So again, these are just some of the factors to consider when trading biotechs. But again, it requires quite a bit of work, quite a bit of due diligence. You have to dig into these things. You got to look at their pipeline, know when the catalysts are. And again, these resources can help you identify these. You've got FDA calendars, trial trackers, etc. So I put those in the notes. I also put those in my response to Carmen in the Swing Trading channel. So again, we'll start talking about some of these resources, how you can use them to help you trade biotechs going forward. And I hope that all helps. Please provide me with your feedback. And if there's other things you want me to look at and talk about relative to trading biotech, so we can continue that discussion. Okay, just very quickly, Sydney also asked about another one, MBI. Is that the one I was, okay, that's the one I was just looking at. That's the special dividend one, so I already covered that, so good. And again, I hope that answered your questions and helps Sydney. Okay, so again, I hope you like this content. I know we ran kind of long today, had a lot to cover, even though it's a Christmas Eve day. So I appreciate you all hanging with us and participating in the discussions. I greatly appreciate it if you'd smash the like button and share our content with your fellow traders and friends. Let's help continue to build our BeachBum trading community. Got a great group of traders, BeachBum trading community, all sharing trade ideas in the chats, in our Discord. Again, you can find an invite to our Discord in the description box below, also on our homepage, beachbumtrading.com, bum without the U. You can have here's links to all our social media sites, invite to our Discord. Our Discord's free to join, with the exception of the few channels I mentioned that are exclusive to our Patreons. All the other channels are open to all participants, and again, free to join. Again, we've got different trading styles, different asset classes, so you can discuss. Yesterday we talked about Forex, etc. So whatever you're trading, you can find a group of BeachBum traders to share ideas with. So again, let us know, provide us your feedback as to how we can improve all of our videos, our tools, our community, etc. Greatly appreciate your participation, support, feedback. And again, we want to wish you all a very Merry Christmas from the BeachBum Trading family, including the BeachBum cats. So happy holidays, Merry Christmas. We hope you have a wonderful time. Reminder, the markets are closed Monday for Christmas. So we hope you enjoy that with your family and friends. And we'll see you all back in the trading rooms on Tuesday. So thank you again. Thank you for participating, and have a very Merry Christmas and Happy Holidays. And we hope to see you this week trading and next week for our weekly trading game plan for the new year. Thank you again. Have a great day.